it's actually more expensive to own a house versus when we were renting. I got a letter from a letting agent saying that I had to leave the house within 2 months. The time was running out. We only had a month, so we decided to go for it anyway. We honestly didn't actually have enough money to cover that 50,000. If the letting agent wanted to please the landlord, we would actually lose nearly all of our deposit. Hello, welcome to the Lived Experience podcast, where we discuss many topics from perspectives of people who've lived the experience. Our aim is for you to see things from multiple angles because things are never that black and white. Today's topic is about renting versus buying a house. This is a topic that everyone will have to think about at least once in their life. You might be thinking about this right now if you're renting or you're about to go and rent your first house. I will share my experience as both renter and a buyer. I currently own a home right now and I'm in a process of selling it soon, so I can go through all of that with you too. Because I've seen a lot of videos that shows only bits and bobs of renting in terms of that bad experience renting the house as well as a home buying, but it's kind of covering more of the journey of buying a house. But I want to cover from the start to finish as a renter and as a buyer. In order for you to see things clearer and be able to compare a bit better, I will segment this whole video into different parts. Part 1, what it's like to look for a property. This is the house hunting process. I will show you what it's like from start to finish. I'm going to be very transparent because this is coming from our own experience. It will cover the journey of house hunting, the paperwork required, as well as the bad experiences or the rejections. This has happened to us from a renter perspective as well as a buyer perspective. Part 2, the experience of living in the property. This will cover all the costs involved when it comes to whether you're renting someone else's house or living in your own house. And we will also cover the costs of what it involves before you can get or live in the property. Part 3, moving out of the property. This applies to homeowners as well because the first house you buy might not be your forever home. So it's best to cover the process of what is required for and how it works when you are trying to sell a house. Part 4, pros and cons. This will be the most beneficial part of the whole video, I think. And hopefully this will help you decide which choice is the right one for you. Let's start with the house hunting as a renter. We were living in Cornwall at that time when we were renting. And again, we started a more serious rental journey. And I said more serious is more of after we left university. That was around in 2019. So our experience would be very different from people who've lived in the city and what it's like to rent right now. Because I heard that the situation's gotten much worse and the rental prices are much higher even in the countryside. But our experience was about in 2019, 6 years ago. At that time, we were renting in Cornwall, but in terms of the process of how the get house hunting and getting onto the rental market, it works the same way across the country. So the process of how it works is that you usually visit housing websites. The main ones are Rightmove and On the Market. That is the case in the UK across the country. The very first one that people think about is probably Rightmove. It will show you all the properties in the area you've selected. It will show the prices as well as whether the place is furnished or unfurnished. In there, you will be able to contact the letting agent. And by the way, those two specific sites are only allowing letting agents and estate agent to post like the house listing onto the websites. That's why you don't really get like the private ones. If it's a private one, you have to go on like Gumtree and other areas or other websites or Facebook Market or Facebook. But in our case, it was through either Rightmove or On the Market. And then each ad listing will give you contact details of the estate agent that manages that property. You contact them and then you ask to arrange a viewing. Usually with renting in the UK, you would need to probably view at least 5 to 10 properties. We had to view probably like 10 plus properties in order to get the right one. But once you have arranged the viewings with the letting agents, you go and view, you see that you are very interested in whichever one. The usual way to do it is you do it one by one, but sometimes the property market can be very, very tough. So maybe this is why you might want to express your interest in more than one property at a time. But in our situation, we had to do one if we get rejected and then we go on. But once you have expressed the interests, you had to fill out a form which kind of gives the landlords the idea of your situation. So that one, the main things they'll want to know about you are your employment status, how many people are planning to rent in this property, and third is why you have decided to move. If you're renting, or why did you decide to rent as someone who's not rented before? In our experience, we actually got rejected many, many times. Actually, if it was all 10 properties, it was all 10 that got rejected. And let me tell you about the exact situation we were in. We were misjudged by the landlords. So to get from this, to explain the situation a bit more, is that at that time I was renting by myself in the same town, and I was doing an internship at that time, until I got a letter from a letting agent saying that I had to leave the house within 2 months notice. Pretty much 2 months, leave now kind of situation. And that letter is called Section 21 No Fault Eviction. And what that is that it's a form of legislation that allow landlords to take back their property without any reasons given to the tenants. Literally, they actually don't need to explain anything. And the minimum notice periods to the tenants is 2 months. For us, or for me, I was kind of told by the letting agent vaguely that the landlords just wanted to come take back the house and go and live in it again. I actually got really lucky to be able to talk to the landlords in person, because they had to come to the house after I received a letter to measure certain things around the house. They want to do some renovations. And what triggered me a lot, and this probably is irritated for anyone who has had experience of renting or is renting, it's to know that the landlords actually told me that they knew about their situation of wanting to move back in 3 months earlier. But the letting agent actually told them the legislation said the minimum requirement is 2 months. So there was no need for them to give notice any more than that. So the letting agent waited a bit longer until it's like exactly 2 months to send us the letter, which is really irritating because we could have had a bit more time to look around. But for long story short, the reason why the landlords wanted to move back in was because of Brexit, and they were living in Spain at that time, so they couldn't really stay in Europe for more long term without any complications of visa application or all the complicated paperwork that comes with the UK leaving the EU, and the Brits now have to probably apply for a visa to be in Europe for a long time, or if they want to be in Europe, they can only do so for 3 months, every 6 months, etc. And that didn't align with their plan. So they decided to move back to the UK. They had a lot of properties, or a few properties around the area, but the place I was renting was the one that they wanted to move in the most. Probably because it was close to the town center, you could literally walk there. So that was the reason. Anyways, let's get back to the form that you had to fill out to the letting agent. In our situation, what happened was that when I wrote down the reason of why I was moving to a different property, and I did tell them that my partner is joining me to rent together, and I said the reason was the landlords wanted to come back in and live in the house again. However, I didn't realize why that was a problem until I went to another town about 30 minutes away from where I was living at that time. And I talked to a landlord because he was promoting his property privately. And then he told me that the reason why, if I got rejected that many times, was because it sounded like I did something wrong. That's why the landlords wanted the house back. I was really, really shocked by this because no one ever reached out asking why the landlords wanted to take back the house. No reason, because I didn't even word it like the landlords wanted to take it back. It was they wanted to come back and live in it. So this was very irritating, and we had to change the strategy a fair bit afterwards. And because of a timeline of just 2 months to look around, and at that time, even then the house market was kind of competitive. So we ended up settling with a house that was on the property market, that was on the market for a while. And the reasons being, quite a few reasons actually. One of the main ones that people didn't rent that place was because the landlord lived next door. So it used to be a detached house, and then the landlord split into 2 houses with them living in one of the semi-detached houses. And they let the other one to be rented out, which is actually a smart move financially. But it can be awkward for tenants, and a certain situation might make the house not very marketable. And you have an enclosed driveway where you have to share that with the landlords, which not everyone would have liked. And then the second situation, or another situation, is that the rent is 50 to £100 at that time, higher than anywhere else. And the value you get was not very good. It was very, very small in comparison to what we would have been able to get in other places that were like 50 to £100 cheaper. However, we were quite desperate. The time was running out. We only had a month, so we decided to go for it anyway. Now let's go through the process of what it's like to now apply to live in that house. Once we have emailed the letting agent saying we're interested in renting this property, they then send us an application and say that you have to fill this out with all the information. This allows them to do background checks on you, as well as seeing if you are eligible to rent this place, aka they look at your affordability criteria. So what usually happens in the rental market is that they take your rental prices per month, multiply that by 2.5. That's the amount you need to earn on average each month in order to rent there. But usually in your proof of employment, like a contract or a letter from your company, it will kind of show you the yearly earning. And that is the amount they will take. But I only talked about the equation to sum it up to monthly. Now we have to get to yearly. They just need to simply multiply that by 12 just to get to the yearly amount minimum earnings you need to have in order to rent this place. For us, the rent was about £625. So when you multiply it by 2.5 and then sum it up to a whole year, multiply that by 12, you get £18,750. However, at that time, minimum wage was lower, and I was on like £14,000 salary at that time. aka I couldn't really afford to cover all the rent based on just my salary alone. So what the letting agent ended up doing was that they split up the rent into half. One goes to my partner and one goes to me, and they did an affordability check based on that alone. So with mine, it was fine because I had enough to cover half of the rent, definitely. And then the other half they applied to my partner, who at that time was doing a 0 hours contract work. This unfortunately wasn't really a stable income based on pretty much just anyone who does financial checks on you, because you don't get consistent earnings every single month. So despite us being quite independent, we ended up having to ask for my partner's dad to be our guarantor. And what a guarantor is that they will kind of be your financial backup in whatever case that, or whatever happens somehow causes you to not be able to pay rent. They would contact your guarantor and ask for them to pay rent on your behalf. So luckily, my partner's dad does have a job, or did have the job at that time, and was able to provide the fixed salary to be able to support him financially on paper. It would have been much more complicated if his dad was self-employed or has 0 hours contract as well. Then that means we would have to run around and find a different guarantor that wasn't his dad. So we were in a luckier situation. Once they have checked your finance and checked your other details, did background check on you, then you are free to rent. One thing you do still have to prove, which is not going to apply to all the Brits who have lived here their whole lives or have had a passport or citizenship here. So you just need to prove that you can reside in the UK legally. For native Brits, you just need to show the passport or your ID, driving license. For me, as a foreigner, I just had to show my visa, and at that time it was a student visa. Now let's get on to the house hunting part to buy. I'll go through our situation just so you can see our criteria is what we need in a house, or what we needed in a house at that time. So we wanted a detached house because we were hoping that we would have enough garden space to put like a glamping pod or a tiny cabin so we can rent it out to tourists. We just didn't want the mortgage to tie us down. We wanted it to be a better financial situation than if we were renting, where we couldn't do anything but just live in it. Which leads it to the size of the garden. We wanted a fairly good sized garden. It doesn't have to be massive, but just enough for us to be able to kind of like section the house out into one side is ours with our own tiny space, and then the other side is for people who wanted to come and rent, tourists. And that also leading to another point where we want to make sure we live in the area where there are a lot of tourists. Either they are like iconic landmarks or just be in the touristy areas. The fourth one, however, this makes things very challenging because we couldn't really afford that expensive of a house, or even expensive house at all. We at that time had savings of £15,000. And we decided to have £10,000 into deposits, which you think that's actually not enough. But on that year, the government allowed a 5% mortgage to be a thing. And a lot of banks did that to allow people who will buy their house for the first time to get on the property ladder a bit quicker. And the government was trying to encourage people to become homeowners a bit more. That was a really ideal situation for people who had smaller amount of savings. It wouldn't have taken them long to save 5% in order to get on the property ladder. And that's exactly what happened to us. So with that £10,000, aka being 5% in mind, the maximum amount we could have gotten in terms of the house price or the loan amount is £200,000. This is a very tough criteria because looking anywhere in England, you cannot get a detached house for that price. Usually that would be a terraced house, or if you're lucky, you get semi-detached. Strategically, you can go for like the end terrace, so you are treated as if you're semi-detached. So with that price point, we couldn't really afford anything in England, so we had to go far and wide, and that led us to north of Scotland. We did house hunting in two parts, actually. One is around February, which is around the end of the winter season. And then the second time is around May and June, which is kind of like early summer. And I will explain the reason why we ended up having to do it in two parts. But the part one, it was quite smooth. We ended up looking for like 5 houses very much within that price point. And we ended up going with the last one that we viewed, and we put an offer on it. So the way you look for a house is exactly the same as in renting, on pretty much the same websites. You contact the estate agent just like usual, and you arrange a viewing just like usual. But one major thing that is different from England and Wales is that Scotland has a slightly different process when it comes to house selling process. So in England, when you go view a house, you later and you put an offer on it, you later on have to get a home report, because the sellers just pretty much get an estate agent, get whatever thing that needs to be done to put it on the market, and then they put it on the price at the market value or the value minimum that they want. But in Scotland, the seller needs to get a home report first. And a home report is a report that tells you about the condition of the house. If there are any repairs or any urgent repairs that needs to be done, it will tell you all. And at the end of it, they will tell you the value of the home that the surveyor thinks it's worth. And that is the information the bank will use to determine how much loan they will give you. So when you look at mortgage and they say like 90% mortgage, what it means is they will lend you up to 90% of the home value based on the home report. And that's one thing everyone might forget or might not know. So if you put anything higher than the value, you have to cover that yourself on top of that deposit that you need to pay. With Scotland, that report is provided even before you view. You can request that from an estate agent, and you don't need to view until you think that the condition of the house is good. You can accept the conditions of repairs, etc. And then you view it. And once you've viewed it, you would write an email to the estate agent as like a written copy of your offer, pretty much. And then they will pass it over to the homeowners just to see if they're gonna accept. If they accept, great. You now have to get this thing called agreement in principle. And what agreement in principle is that it's kind of like an informal letter from the bank or the lender saying that they can lend you up to X amount based on your earnings and based on your financial commitment in general. Once you have that, you have to send a copy over to the estate agent confirming that you do have a financial proof. Unless you're a cash buyer, then that's a different story. You write an email to the estate agent saying you have cash at hand. But for anyone who needs to get a mortgage, this is the thing you need. At least this was our experience, that you need it after our offer has been accepted. I haven't covered the part where you put an offer. So there are multiple strategy, I guess. So on that year, the house prices went up a lot. It was actually on that year, it was very common for people to offer like between 10 to 30% over the asking price. And we pretty much didn't have as big of a budget, so we kind of proposed about 10% extra. The house that we put an offer on was about £160,000, and we did 10% extra, so that was about £176,000. The sale ended up falling through. Nothing to do with our side. We actually already had a mortgage offer, just to go through that. Yes, so once you have gone through the whole process, your offer has been accepted, your agreement in principle has been issued. The next stage is to instruct a solicitor. So you would get a solicitor to do all your paperwork and handle all of the communication. It's very common to never ever pretty much talk to the sellers ever, because all the communication goes through your solicitors. If you want to know something, you tell your solicitor and they will tell the seller's solicitors, and then the seller's solicitors will come back to us, or more like come back to our solicitors, and then they'll pass the information on. Unless you have viewed the house and talked to the owners directly and you decide to exchange the phone numbers, that's the only time you ever have communication with them. Other than that, you really don't ever get to talk to the sellers to ask for any questions. Everything has to go through a solicitor. So while that is happening, you would have to apply for a mortgage. This is where they will do kind of like a hard check on your credit score. And that credit score is actually the thing you need in order to get a credit card, in order to get any finance. And a hard check will probably stay in your score or your report for like up to 12 months. And this is one thing I forgot to mention, is that the agreement principle, they actually do a soft check on you before they can give you kind of like the amount they can lend to you. And that should be in your score between like 6 months to 12 months. Anyway, so with that check, that's how they will tell whether you're eligible to lend from them or not, which this whole process, providing everything, all can take weeks and weeks. Unless your lender is quite quick, then they can produce that within like a month. But usually we see between like a month to 3 months of that decision being made. And our sale, despite going through all that, our sale fell through because we had a question about the boundary that we can see in the title deed versus what we saw in person. It didn't really align. The title deed looked smaller than what we actually saw. Pretty much the fence was lined up in a particular way where we could literally see that it was much bigger or slightly bigger than the title deed. So we asked for that information. Their solicitors actually left us hanging for about a month or so. So while we were going around Scotland trying to find properties and waiting around, literally ready to move in, we actually had to come back to England and kind of wait it out because the process wasn't going to be as quick as we thought. And they left us hanging for a month to tell us not too long after we moved back to England that they are not going to sell to us anymore and they would like to withdraw the application. Pretty much they didn't really answer our questions in terms of why the title deed doesn't align with the actual boundary of the fence. And what is even more irritating is that the day after, they put the property right back on the market very quickly. So we knew that if we would have gone with it, that could have been a fraud because the boundary line really didn't align with the paperwork. There was no official papers that we could see or that the sellers were willing to send to us just so we can verify. We were actually quite accepting of the situation and we just needed the actual explanation and any proof. But that was not provided. The sale was withdrawn. We had to come back to the drawing board. And that was around May when we had to look for everything all over again. And this time it was quite a peak time for when people would look for houses. We ended up looking for at least 10 houses and going into something in Scotland called closing dates. What a closing date is that when someone is looking at a property and put more than and there are multiple people putting the offers on the property all around the same time. That means the property is in a very high demand position. So we entered that at least 5 times. We lost every single time. We even up our budget even more to about 250,000. We honestly didn't actually have enough money to cover that 50,000. We were hoping to get a loan or getting any loan from family members just to make up for that difference. But even then, we actually didn't win any of the closing dates because we ended up choosing the area where there are a lot of retirees, pretty much people who already have cash at hand or in the process of selling their house, and they have much bigger buying power than we did as a first-time buyer. So that was why we lost. However, we ended up going for this house. It was on the market for a while. The reason that it was on the market for a while was that for what you get is still, the house itself is worth that price. However, you have to use a shared entrance or shared driveway with a neighbor actually or owning that land. You only have the rights to use it pretty much. And that was one thing that stopped a lot of people from buying that house. But they did drop the price gradually, and then we were able to get it at literally around the maximum price we were willing to go for. So we put down the offer, write it all email and writing all over again, get agreement, and it was accepted. And then we got the agreement principle all over again and got the mortgage offer. Went through the whole process from start to finish all over again. Eventually we got it. Pretty much everything was able to go forward quite quickly. It all took about just over a month to get this done. From that moment when we got the got the offer in to move-in date, it was a very quick turnaround. One thing I haven't gone through yet is how the mortgage works in the UK. It's not just that you got a percentage that the bank is willing to lend you up to that amount and then you pay the deposit. There's actually multiple packages of mortgages that you can choose. There is a 2.5 years, there's a 5 years, and from time to time, very rarely you will see anything above 5 years. That's a fixed mortgage. And then what that is that you will be able to hold that interest from the moment you apply and keep that rate for 2.5 years. So no matter what external circumstances happen, if inflation happened or like interest rates suddenly went up or suddenly went down, it won't affect you because you have locked in that interest for a fixed period of time. And your payment will stay fixed, predictable for a certain period of time. And then there's variable, which means you can let the interest flow with the market. Your payment monthly will be specified based on what interest it is on that month. Can leave yourself open to risk, but if suddenly interest rate drops, your payment will be lower than what is set initially. But there's also a risk that if the interest rate suddenly goes up, or a lot higher or even slightly higher than what you started with, you will pay more than what you expected. There's a risk of payment not being the same month on month, and most people usually choose a fixed rate. This is very beneficial when you start out with low interest, because that means you can keep that low interest and lower payment throughout the whole time that you've got that package for. And then with the fixed rate, you can either move on to another fixed rate. This is why you have to apply to a different lender, or maybe you can stay with the same one, do all the financial check, not as much as you would like when you first buy a house, but still fairly a lot of checks. And some banks will ask you to pay for application fees or just to cover the surveyor cost to come and look at your house to see if it's worth that value. And that they can lend you based on however much they think the value of the house is. Or you can leave it to run as variable. And this is pretty much just moving from one type to another. Variable rate, as I already explained, is left up to the market to specify your rate. Also, how the mortgage lender would kind of calculate your affordability is what they do is they combine your household income or per year and multiply that by between like 4 to 450. Really depends on the lender, and that's how they know that's the amount they can lend you up to. So that's what your offer is gonna look like. That is all definitely entirely based on household earning. Exactly, very, very similar to what it would be for renting, but the numbers are a bit higher because the bank wants to make sure you can commit. While renting, you can just leave with like a month notice after you have finished your tenancy contract. Now, let's get on to part 2. It's about living in the property. Let's start with renting. I love running through numbers because I think this is one of the most important things you should be doing, just on any aspects of your life, but especially when it comes to the living costs. This will help you identify how much you can have to save, and then it will just pretty much help you manage your money better. I had to dig up all the emails to look at the exact numbers of how much it costed us to rent at that time. Right, here's what we were paying between 2019 to kind of late 2021 when we moved out of a rental house. Our rent was £625, but that was the amount we started with, but we actually ended up paying at the end of the tenancy contract. We paid £675 because we offered the landlord to pay £50 a month extra so we would have a pet. The landlord wasn't very experienced with a tenant who had a pet, so we decided to propose with a £50 extra a month so we could have a cat. Let's just say it's £675 for rent. Our council tax was £150. Our council tax is usually calculated based on the size of your property and the type of the property. At that time, it was semi-detached, which is practically the second more expensive type of property to tax you on. But it was lower because we only had one bedroom. Our water and gas bills were about £150, and this covered like heating, cooking, all the hot water, etc. Our internet costed about £18 at that time. I think we managed to get something really good deal back then. And summing all of those up, it rounded it to £993 a month. Now, let's look at when we became a homeowner. Our mortgage was £1,060. Our council tax was £184. So in Scotland, you don't have to pay for water bills because the government a while back bought back the water companies that were privatized and then brought it back to become a state-owned supply again. So because of that, our water bills are all included in the council tax, and they will kind of see how they're going to charge you based on the services you use. For instance, we didn't have to pay for parts of the sewage because we share a septic tank with a neighbor, so that part was deducted a bit from our council tax. So it would have been higher if we would have used like the council sewage, etc., but we used a private one, so we didn't have to pay for that one. Our gas was about £5 a month. This only covers the cooking stove. Because we live fairly remotely, it's not easy to have a gas pipe running all the way to our property. So we use a propane gas tank. We have two big ones and it's fairly affordable to top it up. It's like £100 or so, and we have used it for nearly 2 years and we've never had to top it up. So I average based on that and it's about £5 a month. The heating, this is, again, as I mentioned, we live quite remotely, so there is no pipe that can run from cities all the way to our area. Because of that, we have a private or our own oil tank, and the whole property uses heating oil, in order to warm the house, have our hot water, etc. And that is a fairly expensive part. Probably multiple reasons. One is that we live in a colder area. So if you remember, we live in Cornwall at that time, it was down south. So generally it is warmer than up here. Up here, you don't get past like 20 degrees pretty much all year round. And it is windy and rainy for pretty much most of the year. So it is quite cold and you do need to heat the house. And because of the amount of rain, you can get high condensation, which means mold will appear much quicker than anywhere else in the UK. Because of that, we have to keep the heating on like 16 degrees. The house had to be heated throughout all year round, minimum 16 degrees all year round. So we had to turn it up, heating up higher than usual. Also, the fact that the house is actually significantly bigger than when we were renting. Because of that, our heating ended up being probably at least 2 times more expensive based on all these factors. As I mentioned that we have a shared septic tank, so our sewage costs or black water costs is about £10 a month. We have to get it emptied with the neighbors about once a year, and our portion of it is about £100 a year. So I kind of sum it up to be about £10, rounded up to be about £10 a month. Electricity is about £80 a month. We also have to do home insurance. It started with £35, then it rose to about £65 a month. It's just because the insurance company decided around that time to increase the cost for insurance in general. So the price jumped up massively, and we ended up paying about £65 after our first year. The internet costed about £35, and rounded all of those up, you would get about £1,639 per month in terms of costs to have a house. Now we need to cover the cost of what is required in order to get onto the house market. So let's start with renting. As I mentioned before, that you have to have deposits. Our situation was 2 months rent, and that ended up being about £1,250. You will get that back if you didn't cause any damage, or if there were minimum damage, you would get most of that back. And in our case, we got most of that back. For home buying, we put down £10,000 for deposit. And then it didn't include the cost of hiring a solicitor. In our case, hiring a solicitor costed us about £3,700. So with those two combined, the cost of the deposit for the house as well as the cost to get a solicitor, both of those combined meant we were paying £13,700, and we do not get that back, of course. Now let's move on to moving out of the house from a renter perspective. When you're renting, there's not really a lot of things to do when you have to leave. Usually you have to wait for your tenancy contract to end. And usually a month before, the letting agent might ask you, do you want to stay? If you want to stay, you can choose between renewing the contract for the same amount of time, or you can go on a rolling contract, which we did, because at that time we weren't sure what we were going to do. So after 1 year of tenancy contract, we decided to go on a rolling contract. And a rolling contract is that you get to stay in the house, and the contract technically will renew every single month. And in order for you to leave, you just need to give a month notice, and that's it. Or a tenancy contract, when you get to renew it, you will have to wait until the contract ends, and then towards the end of the tenancy, you can give a month notice for you to leave. And the process is fairly simple. Throughout that whole time, your landlord will put your house back on the market so they can get potential renters to view the property. During that time, you'll be asked to cooperate with the letting agent, so to make sure you keep the house nice and tidy for when people come and view the property. And you'll pretty much get people coming in, looking around the house with the letting agent showing them around. So it can be a bit of an awkward situation when you do that, because you still have to be living in it while showing everyone around. Afterwards, the letting agent will look around the house after you are gone to see what kind of damage you've done, if there's any at all, just so they can see if they need to deduct anything from your deposit. One thing I haven't mentioned is that when you first send the deposit over to rent a house, your deposit actually goes into a renter or deposit protection scheme, which is a government scheme in the UK to make sure the deposit doesn't stay with either party, or like the third party, it stays with the government and is protected. And when a letting agent or a landlord wants to deduct something from your deposit, they need to give a reason. I think they need to submit a reason from their side. And then once it's done, they will submit it to you. You can look on the platform of the government scheme to see all the reasons why you have had some deductions, and the final amount you will be paid and who it will be paid to. So for us, we ended up getting most of our deposits back. But we did run into this situation, which was actually quite annoying because we had a kitten, and this kitten, or just any cats, love carpets, and they love doing their business on the carpet, even though you have a litter for them. And this happened to us many times, and we had to get rid of the smell ourselves somehow, but somehow it still lingered. So we ended up hiring a professional carpet cleaner just to clean our out, get rid of all the smell. Despite doing that, the smell still lingered, and most people would suggest that you open the window for like a few days before you leave. However, we ended up getting a specific cat breed that cannot be let outside, and any cat owners will know that cats are great at escaping, especially our breed. So we had to keep everything shut. Because of that, the letting agent came in and could notice the smell. So we got deducted for that. But what the landlord was trying to do, which I'm surprised that the letting agent even told us about this, the landlord wanted to deduct our deposit to get her a new carpet for the whole downstairs, or might even be the whole house. Luckily, our letting agent actually was being quite fair and said to the landlord that no, you cannot do that. What you could do is deduct some cost in terms of cleaning the carpet, but not to replace it entirely, because the carpet was very, very old. Even the carpet cleaner we hired came in, and he recognized the carpet because he's done the cleaning in that house quite a few times and many years now, and he realized it was exactly the same carpet from the very first time he was called in to clean the carpet. If the letting agent wanted to please a landlord, we would actually lose more than half or nearly all of our deposits. But luckily we didn't, and we only got charged like minor damages, which was fine. Now let's get on to moving out of the house when you are a homeowner. What it means is you need to sell it first. So the whole process, like I mentioned previously, around part one in terms of house hunting, in Scotland, you as a house seller need to hire a surveyor to get a home report done. And I'll run through all the numbers with you in a bit. Most homes in the UK, you need to hire an estate agent. It just because they can get onto those housing websites that can reach people much further and wider. And those are the trusted websites that people go on and look at, which only estate agents can get on because they have to pay a certain fee to be able to list. And unfortunately, those fees get passed on to the sellers. And once you're on board with an estate agent, usually they will advise you to get a professional photographer so you can get better photos. And that also is a cost that the sellers themselves have to pay unless they can come up with their own images or get better images and use those instead. The estate agents, the way they charge the fee is usually by the percentage of the house sale. For our area, it was common to do about 1%. There will be estate agents that charges a fixed fee, but in most case scenario, it will be percentage. And if anyone charges you above like 3%, you might need to look at other choices because that's a lot of money. Our area, as I mentioned, is on average about 1%, and you don't really get anyone charging more than that. There's another thing that they will also give you to pay or hand the cost over to the customers, aka the sellers, is the VAT. So if you actually think about it, it's not 1% you have to pay to the estate agent, it's actually 1.2%, at least in our case, because they hand over the VAT. So if you get anyone or any estate agents that charges you more than 1%, remember the extra VAT you need to pay for. So instead of 3%, you now have to do 3.6% to give it to the estate agent. So this is one thing majorly to look out for. Right, let's get down to the numbers. So we had to get a home report, which ended up costing about £654. It was a fairly expensive thing because honestly, the surveyor only came to the house and spent like half an hour, less even, to look around the house. Usually the valuation could take between 30 minutes to an hour, but in our situation, it was about honestly less than half an hour, because the previous seller already got the home report just literally under 2 years before. So they didn't do it too much, but they still charge us the full price of what it would have costed. And the home report, it gets more expensive the higher value that your home is. For us, it was on the cheaper end, but it and still ended up being about £654. Next is a photographer cost. Honestly, we thought this was way too expensive because although he did bring a drone to take some pictures as I was looking around the house, did take a fair bit of time to do it. I think the whole process ended up being like an hour or so. But the photos that were used, I think it ended up being only just like no more than 6 photos. Despite that, we were charged about £300. And if you remember, I said that if you want to list your house on like the common housing websites, you need to pay for that too. And the estate agent will pass that cost down to you. So for us, in order to list on many main websites, we actually ended up having to pay £360 on just the cost to list it on, which is a fair bit, in my opinion. And then again, that's on top of the percentage 1% or 1.2% with the VAT to pay to your estate agent once a house sale is completed. We haven't fully sold the house yet, so I can't tell you the final number. And there's another thing, if you do get a mortgage or you have a mortgage on a house, what you need to pay for, this applies more to the fixed rate, where if you pay off the house before the fixed rate ends, then you have to pay a percentage of the whatever loan amount you've got left. Usually it'll be higher on the first year that you first got the mortgage, and then the second year will be a bit cheaper. For us, the loan amount left over is probably about 190,000, and we are selling the house kind of like in the second year of having the mortgage package. Because of that, we will be charged about 1%, but that is at least £1,500. So I'm pretty sure we'll end up paying about £1,900 just to the bank to leave the mortgage. There's no way around it. If you sell it and you receive the money from your buyer before your mortgage ends, you will have to pay that. There is no way around it. If you want to not pay for it, you have to wait until your mortgage expires and go on to the variable rate. This is only for fixed rate mortgages. Then from there, you'll be able to sell the house, I think, without paying that much fee. But this all based very much on what the bank policies is. You need to check this on your mortgage agreement. Next is to have a solicitor. They will be the one who deals with all the paperwork and any communications with the buyer solicitors. As I mentioned in the previous part, when it comes to house hunting for home ownership, is that solicitors will be the ones communicating amongst one another. They'll deal with all the paperwork and even take in any queries and any answers from both parties, and is a very necessary step. For the home selling part, the cost for solicitor is significantly cheaper. So for us, we were quoted about £1,100. However, we did use a comparison site just to kind of go for a cheap to medium range solicitor, the ones who get good reviews but still not expensive. It could be because of this reason that we don't get the best services, but we have heard from everyone who's gone through this whole process, and everyone has said they've had bad experiences with solicitors in the UK. We have not really talked to anyone who has a premium solicitor where they're a lot more expensive. We were recommended by the estate agent to have to use one of the solicitors they know, which is on a premium price. And when we talked to him, he was really good, at least good with communicating, etc. Compared to the current one we've got, they're not very good at communicating. We currently have to do the chasing. and they do tend to leave things a bit more last minute. But the price difference is large. So with the premium solicitor, we were actually quoted about £1,800, which is about £700 more expensive than what we were quoted for the current one we were using. If anyone wants to use the premium service, feel free to, but we prefer to maximize the amount of savings we can get or minimize the expenses it would involve to sell the house. Now, to go through the numbers of how much we were able to sell the house for, we sold the house for pretty much exactly the same amount that we bought it for. Now, you could say that we should have waited a bit longer or negotiated a little bit more, but honestly, we had to get this house sold as quickly as possible so we can move on to the next stage of our life decision. Things were changing drastically, so being able to get rid of the house as quickly as possible was the main objective. And another thing is that we had a mortgage deal ending around September time. Another mistake we also made was that we didn't realize that house selling would take very long. So we actually ended up putting it on the market or started contacting estate agent around February time, which that actually would only leave about 7 months to sell the house from start to finish, pretty much move out by September, which in the housing market is a very tight turnaround. Estate agents or anyone we know always recommend at least a year before, but there was a lot of things that happened, so we couldn't put it on the market as quickly. So we were on a tight turnaround, and luckily we were able to get someone to put a serious offer on pretty quickly, and we actually will be able to move out before the mortgage runs out. The reason why we want to make sure we sell the house before the mortgage runs out is because we didn't want to go into a variable rate. Because when I did the calculation, it said that we would, despite actually paying off a very small portion already of the mortgage, we would still have to pay more than what we are paying now on monthly mortgage if we go into variable because of the interest rate. This could have changed because that was done a while back, but any mortgage advisors would tell us that you need a minimum of 3 to 6 months to apply for a new mortgage deal. So with that calculation in mind, it pretty much means that we either pay exactly the same or a little bit higher despite have already paying off parts of the mortgage. What you need to know is that in the first 2.5 years of paying off the mortgage, very small portion of what you pay for every month actually goes towards paying off the initial loan. So from our side, we pay our £1,060 a month towards the mortgage, but the actual amount that went into paying off the initial loan was between £110 to £148. So your amount will go down very little, and I totally understand that. Because of that, if we move on to the next mortgage deal, that it won't really make much of a dent in our mortgage payment, but we didn't really want to continue with that burden anymore. So that's why we decided, let's just sell the house as quickly as possible before the mortgage deal ends. And throughout the whole process, you will have to allow the estate agent to tour the people around your house, look for anything. However, what is a bit more common in the remote area, which is kind of like a disadvantage, is that you pay the estate agent to list your property, to be in contact with the potential buyers and such, but you actually have to do your own viewings because you live quite remotely. And it takes a while for the estate agent to drive up to you to do any viewings for you. You can do that, but they will charge you the amount to cover the costs of fuel as well as the cost for time for them to be here, which is unfortunate because usually when you hire an estate agent, you would expect them to do the viewings for you. But we have heard about this already beforehand, so we kind of expected this. It's not the most ideal situation, but we kind of were in a rush to sell the house. However, because of that, we're able to cover more details than the estate agents would, because anything the potential buyers ask us, we would be able to answer with much more knowledge than the estate agent, because the estate agent doesn't know like the full legality of this house. For instance, like the shared driveway. For us specifically, we don't own the driveway. The neighbor owns the driveway, but we just have the rights to it. And that's a part that the estate agent, I don't think, really bothered asking. So we are able to give much more details than the estate agents. By all the miracles, we actually ended up getting someone to view the house and put the offer on the spot after probably about like 7 viewings or so. One thing that we were told by the estate agents is that a lot of viewings will come in around maybe the first few weeks when you put it on the market. That's when you receive the most amount of viewings, and then after that it will be a bit more scattered. You might receive a bit more once a week, or like once every 2 weeks or something like that. It will slow down as it goes. And we did put the property on the market around March also, which is kind of the right amount of time or the right month to start putting on the market, because that's going to go into spring, which people start looking. But if you put the house on market around like April, May, June, those are the prime time, as we were told, to have people viewing the house, because the weather improves, people in a better mood or in a mood to look around for houses a bit more. Right, let's talk about pros and cons and start with pros for renting. Despite all the lengthy paperwork and the sudden Section 21, renting actually allows a lot of flexibility. And I'm talking about the fact that you can just leave without having to go through the lengthy process of selling the house. Because as I said, it can take a really long time. And if you are supposed to move into the next house you're planning to buy, you then have to wait for your house to be sold first before you can get onto the process of getting the next house, which can take a very, very long time. It can just take a few months, or it can just take up to a year, and it's really hard to predict. So there's a waiting around that kind of ties you down and not allow you to be as flexible. While renting, after the tenancy contract ends, you just need to give 30 days notice, or before it ends, you give it 30 days notice, and then you can leave as soon as that 30 days end. And if you're on a rolling contract, you can decide that whenever and leave by giving 30 days notice as well and just leave. There's just not much process into it. You don't need to pay anyone to try to help you out with the paperwork, like with buying. You have to hire a solicitor to do so. While renting, you just leave. The second one is the cost. In our very specific situation, renting is actually cheaper. As I remember, as I told you about the numbers, it was £993 to rent versus £1,639 to live in a home that we own. Yes, you could say that things have really changed a little bit in terms of the amount of years, but even when we put that amount into the Bank of England's inflation calculator, it said that we would still save 25% from just renting compared to us buying right now. And yes, it's not the perfect comparison because that house was a semi-detached house and significantly smaller. So certain bills would be more expensive in this house. But let's just compare that alone. Let's say I never left and I stayed in that house, and then with the inflation and everything going up, I would still save, just by numbers and not by the percentage, probably about £300 just to rent. And if I'm smart about this, I would use that £300 difference to invest or to save for some other things. Or if I wasn't that smart about money, I would still live a more comfortable life, because that £300 can go towards disposable income or just savings for any emergencies. And the last pro of this is that you don't have to really pay anything to get onto the rental market versus when you had to buy your own house. Yes, you could say that eventually when you sell the house, you'll be able to gain all that back. However, you have to factor in all the costs. to have this house, to pay for mortgage, to do renovations, any repairs whatsoever, because that's now your responsibility. When it comes to renting, any damages or any repairs that needs to be done are done by the landlords. You don't have to be responsible for anything unless you break it yourself or it's an unjustified or like a tenant made damages. But most of the time, it's the landlord who is responsible to upkeep the house. While this one you own now, so you have to do it yourself. And remember the cost of the solicitor when you try to buy the house. You have to also factor that in because when you're renting, you don't have to pay that. You also don't have to pay a estate agent any fees because all the fees that are charged when you're renting, it goes to the landlord. The landlord is the one paying for the letting agent, not you. But when you are buying or when you own a house and you have to sell it, you have these costs as well. So you have to hire a solicitor again, and you have to pay for the estate agent percentage too. So this is a factor you need to really take it all in. It's not as black and white as I own a house. Eventually, in the next 20 to 30 years, it will give me enough value for when I sell it, I will be able to make profit. You really need to run through the numbers based on what you've seen in the past and look at your mortgage to see by the end term that you have paid off, however long, like for us, it would have been 35 years, how much interest you would have paid on top of your loan in order to get there. Now, let's talk about the pros of buying or home ownership. We definitely didn't have to deal with that Section 21 thing because we bought the house, it's ours. No one's going to kick us out of it unless we stop paying the mortgage and then the bank will come and take the house away from us. As long as we continuously pay the mortgage, the house is never going to not be ours. No one literally can kick us out. The second pro is that you don't really need to ask permissions for most things. Of course, unless you have to do any extensions that are above the size that the government allows, then you have to submit planning permission and then practically ask the government a permission to do that extension or build other things that requires the government consent. And at the same time, the neighbors' consent. In our specific situation, we shared the driveway. So the one thing we did unfortunately have to ask permission for was when we wanted to rent our house out on Airbnb when we were living in it. And that is because the affected property next door needs to be made aware of our intention. And unfortunately, in Scotland, when we bought the house, you have to also get a license from the government in order to operate yourself as a holiday let. You don't have to do this in England and Wales at the moment, so you pretty much can just put it on Airbnb or booking.com and just rent it out whenever you need to. In Scotland, however, we had to go through all the process to get the license done, ask the neighbors, ask the surrounding neighbors. The third pro is that when you're trying to renovate the house or decorate the house, you don't really need to ask for anyone. And then there's the garden. You can pretty much do whatever you want to. However, in a rented home, this can be a bit different. When you want to do any renovations, which technically you're not really allowed to, if it would change maybe the structure of the house, the layout, really definitely not allowed to do that. But if you want to do some decor and then hang up some pictures, etc., or anything that involves drilling a hole, you will need to be careful because you need to fill that hole up and paint it, etc., when you leave. You can't just do it and then just leave it because you'll be charged for that, unless you don't mind being charged for that damage, then feel free to do so. But then there's a lot of things like painting the walls. You're not really allowed to paint the walls unless you're going to revert it back to how it was in terms of the colors. It has to be the same as the original color. But in your own house, you paint it however many colors, you can put up wallpapers, etc. So the freedom to decorate and renovate is yours. It's the same when it comes to the garden. Most of the time, renters are, of course, allowed to use the garden, but you probably don't want to add anything that's permanent in there. Like, let's say it's a fruit tree, you might not be allowed to add that there, and the landlord might ask you to remove it or charge you to remove the tree out of the garden. Well, it's your garden, whatever, do whatever you want, and even when you sell it, it doesn't matter. So far that I've listed all the pros that comes with home buying, in my opinion, is a little bit more on the emotional side, because as I ran through the numbers before, in terms of the financial side, it didn't really make much sense because we were not only paying more to live in a property, we also had to pay the extra bits in order to get onto the property market, aka just one thing, the solicitor fee, and then we had to sacrifice our deposit, aka our savings, in order to put an offer on this house properly and go through all the financial process. And not only that, all the repair costs will actually be up to us to do, which when we moved in, there was one or two things that needed to be repaired, which is actually quite minimal compared to other houses, but it was still a cost. You still have to hire a tradesman to do the job. Now let's talk about the cons of renting. I was talking a lot about the negativity, I guess, in terms of owning a house. That kind of ended up tying in with the pros of renting. But in our situation, it really didn't really make sense to go into the home ownership. We weren't in the good financial situation to do so. But we do still need to address all the cons when it comes to renting. Number one is that there is a lot of uncertainties when it comes to renting, purely because the house isn't yours, and at least in the UK, the landlord can take it back anytime without really giving you much of a valid reason. I think the legislation will be changed in the future, but this is again based on our experience when we received that Section 21 and had to leave within 2 months. That was very stressful. It was something that really should be much more regulated, because moving to another home is gonna take a while and it's a lot of hassle. And with the current rental market, you probably have to view at least 10 to 20 properties in order to get one. And then there's the whole process of trying to move on to the next house while you have to deal with however long it takes you to for your notice period to end. Unlike a house where there's a lot of certainty to this. It's all entirely based on how long you want to stay there, not when someone suggests that you could stay there. Number two, this was already tied in with the pros of owning a house, is that you can't really do a lot. You pay them to allow you to exist in the property, and that's practically it. If you want to do any decorations, you're gonna end up complicating or giving yourself more hassle when you had to leave the house, because you need to leave the house as if you've never lived in it in the best possible conditions so you can get all your deposit money back. Number three, the rent prices can go up. That's one thing, is that once your tenancy agreement ends, the landlord can actually put up your rent afterwards. Or when you move to another house, it's not really guaranteed you're going to get similar prices, even if it's in the same area. This happened to us in Cornwall, where when we moved out, we literally noticed the prices of everything going up significantly, because at that time in Cornwall, a lot of people were buying homes. This was after COVID. Big city people were buying homes in Cornwall, so there was like a massive shortage of homes for people to rent, because people would make much more money to sell, to let the house be rented out by tourists. So there was a massive lack of houses for local people to rent. So this is where anyone who still has those properties and want to rent to locals put up their prices a lot. We also noticed that with our property that we moved out of, that they did also put up the prices, although fair to them that they didn't put it up as much as others, but it was still up by like £200, I think. It's still the unpredictable part. While when you have a mortgage, especially fixed term mortgage, you actually get a fixed amount of payment every single month until the contract ends. And when you move on to the next mortgage, you actually more likely to pay less per month compared to if you rent. You probably should expect when you move on to the next place, it's potentially going to be more expensive. Or if you renew your tenancy contract, you might need to expect that your landlord will put up your rent. And the only way to do so, to not put up with it, is to leave and go somewhere else that potentially could offer slightly lower, but you might not get the same value as when you first rented. So that's one major con, but major pro for the home ownership. Number 4, what you pay for, you never own it. And this is probably the biggest argument anyone has when it comes to trying to convince someone to own a home is when you are renting, you're simply paying for someone's mortgage, which is true. But for when you own your house, the mortgage you pay, aka the rent you pay, comes back to you eventually at the end. But this is one argument that I like to make on this. I believe it really truly depends on the person's situation. For instance, in our situation, it's actually more expensive to own a house versus when we were renting. And again, this did include the inflation that has accumulated over time from 2019 until now. For us, we also did not have enough money and were not in a good financial situation to purchase a home. There are so many advice I like to give when it comes to whether you should go on to home ownership or not, is how you manage your money. Number 1, you should never allow your bank account to be fully drained. Because as mentioned before, as a renter, you don't have to pay for any repairs. If you want to buy a house, you need to make sure you have some money left over. And my recommended amount in the UK would be at least 10,000. You gotta at least have that amount, even after you've spent all that money to get the house. Number 2, this involves more about the financial calculations and your own situation. And I truly, truly think everyone needs to do this calculation before they even put an offer on a property. Is you need to see how much the cost of living in that house that you're gonna buy is gonna cost. I think there's like a recommended ratio in terms of a good financial management based on your earnings. So what you want to do is to make sure it doesn't cost you more than 50% of your total household earning. Or if you don't share the money, then it would be more like your portion of the cost to live in that house. How much would it be? And it should not be more than 50%. This doesn't just include the mortgage and the bills. I also mean the grocery, the minimum cost, whatever you have to pay to get to your work. If you work at home, great. You don't really have to worry about the fuel cost, but what about car insurance if you have one? So all the fixed expenses you've got in your life to exist, pretty much, you need to factor that in, and that shouldn't cost you more than 50% of your earnings. Because this is why you can allocate the other 50% of the earnings into something else like savings, investment, disposable income, go travel, etc. to live a good life. That's the ratio I do believe, and I think this is available for you to research online as well. So do your own research on that. But do try to get that cost. It doesn't have to be down to the T. It can just be an average, like an average cost for the bills in that area, mortgage, etc. You can also compare mortgage deals online just to be able to get some monthly payment numbers so you can play around with. Do not go with the cheapest number that you can see, because in our situation, things went wrong and we couldn't get the cheapest one possible. And there might be other scenarios that will happen with you, so you couldn't get like the cheapest one you see in the comparison site. Oftentimes you might talk to mortgage advisors, and this is where they will recommend things to you that you can't even find on the market, but you don't really know how much it's going to cost. So do your own research on that one and probably look at the medium range package just to see how much it would cost you, just so you leave some room for errors. What I would have loved to do is to get my mortgage payment to pretty much be very similar amount to when we were renting. The proportion to our earnings was significantly different. When we moved into the house, we ran out of savings because we put it all into whatever cost that is involved to get this house, as was the move-in cost. So we didn't have any budget whatsoever for any emergencies. Our living costs then increased from below 50% to about 66%. which you can see is pretty much a bad decision financially. So if I would have done it again, I would do what I literally just recommended then and then buy a house, because I'm really not here to trash being a homeowner. But one thing that is not so black and white, and this is not something anyone tells you, because when you talk to anyone when it comes to buying a house, maybe your parents, your grandparents, they always tell you to just buy a house. Home ownership is the best. But things have kind of changed because house prices have gone up a lot, a lot. Interest rate has gone up. Inflation, things have gotten more expensive. So you can't fully apply that same advice that we've seen for a few generations to us anymore. At least I don't think. And this very much apply to our situation. So run your numbers as much with much detail as you can get, and then see if it's worth it. If it is, I think home ownership is a great decision. But I think this is where renting can have a bit more of an advantage. But you have to be smart with money, because we definitely weren't. That difference that I mentioned before of 25% between about at least £300, we could have used that to invest. And that would have accumulated over time, even if we weren't doing that with just the stocks. We could have done it by putting into a savings ISA, which I think the highest savings rate earning you could get was about 5%. So we would actually be making more money while living in a rented home. Even though we don't own the house, we have used our money in a smart way. However, if you use that difference to just spend more on leisure, traveling, or add more to your disposable income, it might not be the best idea. Yes, you have a fairly fun and good life, or better life compared to when we were going through this and living in a home that we own. It isn't taking a full advantage of your situation where you don't really have much of unexpected costs. And again, all of this is up to you what you want to do, but I am telling you about our experience of what we went through, what we would have done differently if we could go back to, looking at houses to buy again, or when we were renting. This video is not a financial advice. It is me telling my story. Part of this podcast is to tell you the lived experience of a certain topic. And this is my lived experience as both renter and buyer. I hope this video has been helpful for you. I think there is a lot of pros and cons on both of them, but it truly depends on your situation. Thank you very much for listening. If you are still around or have listened / watched the whole thing, I'm really, really grateful, and I will see you in the next video.